With Bitcoin, I treat it as an asset that is going to protect my long-term wealth. So crypto played a role in all of this, and it plays it at many levels.
As the clock ticks ominously, Powell's words serve as a sobering reminder that the tranquil surface of the financial world masks a brewing tempest, where those unprepared will be swept away in a whirlwind of uncertainty and regret.
And that journey led me to crypto. I saw it and I knew that this was the answer. And that's why I first bought Bitcoin in 2013, was exactly this, is once you see what has happened, we know the system now, regardless of how it ends, whether it ends in slow, ongoing.
Skepticism crumbles in the face of Powell's unyielding analysis as he unearths the profound implications of cryptocurrencies, foretelling a future where the unprepared are left grasping at the remnants of an outdated paradigm, their hopes shattered by their own complacency.
So going back to 2008, the big thing that changed was we lost trust. We lost trust in the system. People lost trust in the American dream or the European dream. They lost trust in banks. They lost trust in intermediaries. They've lost trust in media. They've lost trust.
Amidst the cacophony of ignorance, Powell's voice rings with a clarity that reverberates through the hearts of those willing to listen.
Alternative financial system attracts more people over time because the old one keeps proving itself to be unreliable and actually disadvantages people. So I think that's the case. It's been, well, both of our core assumption for a while that it doesn't have to be an instant migration like Balaji's saying.
Right.
That migration will come.
Compelling them to face the stark reality that awaits. A reality where the unprepared are left to bear the full weight of their inaction.
The answer is you need to transition to what I call the Bitcoin life raft or the parallel financial system. It's there and you can participate with $1 or $1 billion.
Are left to bear the full weight of their inaction.
So nobody has trust. So, well, crypto is a trust-based system, which is interesting. But what it means that, okay, if you don't trust anybody, you need something that helps you. That traditionally was played by gold. You know, I don't trust your money, you don't trust my money, I don't trust that you're going to do this, so I'm going to keep gold.
In the shadow of this impending storm, Powell's piercing insights ignite a sense of urgency, forcing individuals and institutions to confront their own vulnerability and embark on a race against time to navigate the treacherous waters of cryptocurrency disruption.
So let's say you're Nico, the producer, who's listening to this call. Nico, millennial, can't afford to buy a house. What does Nico do? Buys NFTs, buys crypto, because it's an asset, right? All assets are a future deferred consumption.
A crescendo of anxiety swells as Powell's revelations unfold, exposing the dire consequences of a world caught off guard, where those who fail to adapt to the rapid evolution of cryptocurrencies face a perilous descent into irrelevance and obscurity.
With Bitcoin, I treat it as an asset that is going to protect my long-term wealth. And that sounds crazy when it goes up and down like it does, right? And you've just gone through that full first cycle and you're like, oh. But what you'll find is the low is higher than the last time it hit the bottom. And then the next low will be higher and each high is higher. Oh, it's in an uptrend. So I just don't need to sweat about the ups and downs. What I should do is just accumulate every time it's in a down cycle. Why? Well, because the down cycle is signifying that economic contraction is happening and that the world is slowing down and money's being taken out of the system, quantitative tightening, which is the opposite process, and assets fall. And interest rates are going up, so your disposable income's going down because your wages aren't going up enough and the interest rates have gone up more. So it's at that point, you know the outcome is if economic activity is going to slow down, the next year, in a year's time, they're going to be printing money or cutting rates because it's very cyclical for the phenomena of this rolling of this debt. So therefore, you should be buying more at these points because then you've got the next upside cycle to come, which is what I've always said is It's the cyclical trend within a secular trend.
As Powell's warning echoes through the collective consciousness, it becomes evident that the clock is ticking, and humanity stands at the precipice of a transformational era. The unprepared face a daunting reckoning, while the visionary few seize the opportunity to ride the tumultuous waves of cryptocurrency's revolution and shape a new future amidst the chaos.
So crypto played a role in all of this, and it plays it at many levels. It's clearly not a system of money yet because it's too volatile. It's impossible to try and deal with daily transactions for bread in a Bitcoin price that goes up and down, up 700% and down 70%. That's the way to destroy an economy, volatile money. But in terms of long-term overall savings, because it offsets the debasement of currency, which is driven by the debt and the demographics and everything else, it works very well indeed, in fact, better than anything else. And because we've got this ongoing adoption of the technology. So when you go to, firstly, who is the biggest players in the world that are potentially moving into this market? And I think you and I have even talked about this in the past. It's the sovereign wealth funds. They have an infinite time horizon, and what they need is independence over all things. Now, most of them have an enormous amount of US treasuries, which they will do because they have dollar debts, dollar economy, everything else. So it's not like we're just going to sell all our treasuries, but they need other things. Now, they've been buying gold at record pace, obviously, because if the US seizes or renders useless the Russian reserves in US treasuries, then why would anybody want to hold US treasuries over an extended period of time? You either have to be friends of the US or you risk it. So I see a role, and that's, I think, one of the reasons why the Middle East is becoming very active participants in the market overall. And I think for individuals, because of the lack of trust, it's one thing we can trust because it's not driven by a government. All the governments can do is try and regulate it, but they can't get rid of it. And it actually empowers people to think that you're fighting the government when it comes to regulation. I mean, just look at Twitter. People love an enemy, and Gary Gensler is like enemy number one because he represents the old system, the system that let us all down. And he's kind of saying, look, we're there to protect you. And everyone's going, you never protected us in the first place. We'd rather take our own risks with our own money, which is the agency thing that you talked about. So where are we in the crypto market? The most important thing about understanding crypto is understanding how to price it. And how I price crypto is essentially two major factors. One is global liquidity, and I use global M2 as the main understanding of that. And then there's and that's the cyclical element. And then there's the technological adoption, which is the long-term logarithmic trend. So let's deal with the cycle first. The cycle is what causes all of the pain. And I've been in this space since 2013, and trust me, I know pain. The first time I bought Bitcoin was at 200. It went up to, I think it was 1,000, then back down 85%, languished for a year or two, and then went up 10x from my entry price where I sold out. And then it came back down again after going up another 10x, then it came back down again. And I've seen these cycles. And at first, a lot of people correlated them to the Bitcoin halving cycle. And I think that's probably coincidental. And it's the fact that the economic cycle works in about the same time horizon, this 4-year period after 2008, that the Bitcoin halving cycle does, because it was born out of the crisis. Bitcoin is an answer to the financial system, and over time, the number of users and people who become aware of its superpower, the more people move across. That is a secular trend of adoption. That's really important. The cyclical trend, the cyclicality, is the ebb and flow within it. So that's the boom bust of the economy. Not at a gigantic bust level, it's just a boom bust. Now, Bitcoin halving cycles correspond with all of this. Why? Is there some magic in that reduction of supply? Maybe. But Bitcoin came out exactly at the same time that all interest rates went to zero. They're all part of the same cycle. So every time we get into this economic cycle, it affects Bitcoin in the same way. But over the long run, the adoption, the secular cycle, means it outperforms everything. Because there's no secular adoption of the S&P 500. There's no secular adoption of General Electric, or that stuff's not really happening. Yes, there's an ongoing purchasing by 401ks, but that's really it. So that big mega trend is the observable trend that people can participate in, and it is going to more than offset what is going on with the debasement of currency. And that's to do with Metcalfe's law and the exponential trend of the adoption of a technological network or a technology itself. Great. So that's why Bitcoin charts over time just keep doing this. It's because it's exponential. The S&P 500 doesn't do that because it's not exponential. But the NASDAQ does. Most technologies do. So I think that trend is unstoppable. But then obviously the layer of Web3 that lays on top of it, how can you use this technology in other new and unique ways, is the driver that turns it into a Metcalfe's law adoption model, because you're building systems on top of a network itself. So it kind of becomes self-reinforcing. The other really, really big thing, and people don't really understand it yet, is Ethereum having a yield and a liquid yield out to 12 months. It means you've got a money market curve for the internet. And that gives you a value of money, gives you an ability to price risk. What is a yield on a CeFi platform, risk adjusted versus ETH pure staking? It's very interesting because you're creating, I think ETH is actually almost a complete global digital economy right now, which is very interesting to me. And I'm going to be writing a piece on this as well, about how in front of our eyes, we've actually built a whole new economy. I haven't really realized it. We kind of see bits of it. And really what I think is going on is it's the debt refi cycle, because there's so much debt in the global economy. And what happens is they try and tighten rates, and then you've got to refi all of this debt, and rates come all the way back down again, liquidity comes back. And I think the stasis, the natural tendency is for there to be ongoing stimulus, because a overly indebted economy, and if you think of GDP growth being population growth plus productivity growth, well, with aging populations, that's out of the equation. And it seems that immigration is a political no-go, particularly with real wages so stagnant. So then you've got productivity growth. Now that's not been growing either. So the only way of funding GDP has been debt. But now it takes $3 of debt to drive $1 of GDP. We kind of get to the end game, and there's just so much debt out there, it never gets paid back. So the only way of running an economy now is allowing for the increase in debt, but what services the debt is the cash flows. So therefore GDP growth must be higher than debt growth. If not, you need to run negative real rates. GDP growth, because of aging populations, low productivity, has come down too low to service debt growth, and therefore you run negative real rates, quantitative easing, and other such stimulus. That is the way the world works. That was very clear in my interview with Arthur Hayes, a brilliant interview and well worth your time watching. And I think that's a key construct we all need to understand. So in the cycle, which coincides with the Bitcoin halving cycle, is the global liquidity cycle. And that's the central banks creating liquidity for the markets and for the economies. So what they tend to do is if the economy gets too hot, they tend to raise rates, liquidity comes down, they withdraw liquidity from the markets, take away QE. We've seen this several times before. And what happens is asset prices come down because they need stimulus. Does Bitcoin protect you from this issue of debasement, the mutualization of losses amongst everybody? Yes. Okay, fine. Nothing else matters there. Could it form part of what I call the exponential age of technologies, which could eventually increase productivity? Yes. Now, they're not mutually exclusive. There's no, Metcalfe's law is just a measurement of the value of a network. But this productivity idea is the big one. And the productivity idea is if we can't keep increasing the debt. Remember, the magic formula was population growth or productivity growth plus debt growth. We can't change the population. The debt growth's got too far. So we've got this one thing in the middle. It's the only thing that can change this entire equation. So what we can do is try and grow that. Okay, now let's step back and say, okay, what's happening to the world that's a really big change that happened that the central banks are looking like they're going to print money to do? This next 6 months, crypto, very strong. I don't think it's a replay of 2019, which was a longer pullback while global central bank balance sheets shrank for a period of time. I think knowing what's going on in the world and where it's going, we will probably accelerate. So I think it looks more like 2016-15 cycle, which was a big spurt up, which I think we're still in the middle of, then a long sideways correction for 5 months or whatever, and then another explosion higher as you really start to see the central banks kick in. So I'm very, very positive crypto, but more importantly, a lot of money went in VC into the space, and there was a lot of people building product. So the next phase of what adoption looks like will come. And I don't know what it is. Could come from anywhere. Could come from gaming, could come from digital ID, could come from brands in the NFT and Web3 space, could come from DeFi, I don't know, but it's coming.